This is Ian King Live with a special podcast edition from the podcast show in North London. Today's top business stories. Significant easing of inflation to 8.7%, but food price rises remain stubbornly high. Marks & Spencer to resume dividend payments as sales beat expectations. SSE announces plans to invest up to £40 billion in low-carbon energy infrastructure. Plus,
when we first started out, all we had was each other. And no songs, no Roxanne, no Message in a Bottle, no Every Breath You Take. He hadn't started writing them yet.
the rise of the podcast, why do-it-yourself programming has become such big business. Good morning and welcome to Ian King Live. Today we're broadcasting from the podcast show in North London. Podcasting has enjoyed meteoric growth in recent years, and this event is an international festival marking Europe's biggest gathering of the global podcasting community. Well, Sky News is here to highlight the growing importance of podcasting in journalism. In the next hour, we'll also be exploring podcasting as a business, where the money's being made, what makes for a successful podcast, and where the industry goes from here. Among my guests, Melinda Whitstock, Tim Burgess from the Charlatans, and the Raconteurs team, Gary Kemp and Guy Pratt. But before all of that, there's been a significant fall in inflation this morning, back to single digits for the first time since last summer. The Office for National Statistics said the decline was mainly driven by gas and electricity costs remaining stable in April, compared with the huge rise recorded in the same month last year. Well, the CPI measure of inflation fell to 8.7% in April. That was down from 10.1% in March. But food inflation remains stubbornly high, dropping ever so slightly to 19%, which remains close to a 45-year high.
Whilst it is welcome that the headline rate of inflation has fallen, these numbers show there is absolutely no room for complacency in the battle against inflation. Food price inflation is still worryingly high. That's why we've had food producers, farmers in supermarkets in to talk about what we can do to reduce the pressure there. We are looking at why food prices are just as high as they are and why inflation remains high, because that's such an acute source of pressure on family finances.
Well, joining me now is Sandra Horsfield. She's an economist at Investec. Sandra, I guess the story here is that while inflation's coming down, it is coming down more slowly than we expected.
That's right. Unfortunately, the fact that inflation fell is the only good news in this report. We know already that the fact that electricity prices and gas prices didn't rise as they did last year was the main factor that would pull down inflation. What we didn't see is other categories falling. Goods price inflation, service price inflation, those are the parts on top of food prices. They are still very sticky, and that's disappointing.
Yeah, and the other really concerning aspect, I guess, is that core inflation, which is the measure that strips out volatile elements like energy, food, drink, alcohol and tobacco, that actually rose from 6.2 to 6.8%.
That's absolutely correct. It's the rising core inflation, which is much more under the control of central banks than overall inflation, where energy prices play a big part and food price swings do as well. And on that front, that we have seen yet another jump when that's the part where you think monetary policy has more of a bite is disappointing and has clear implications as far as monetary policymakers are concerned. So in that sense, it's a disappointment not just to market economists, but also to the Bank of England.
Absolutely. Well, that's the key point. The market's currently pricing at least one more quarter point rise in interest rates. Does this actually potentially put half a point on the table again?
Well, we see the chance of the bank deciding to go as far as that as pretty low. There's very few certainties in the current environment, of course, but we do see an easing in the labor market. We see signs, for instance, in VAT receipts recently, that the economy may indeed be starting to slow, but it's simply not enough for the time being. Probably proceeding with another 25 basis point rate hike will be enough. We have to remember the level of rate is much higher now than it was, so it's no need to go quite as aggressively as this. But we're probably not at the end yet in terms of the tightening cycle.
Sandra, what about your own inflation forecast? Where do you see inflation going from here?
Well, there's still further signs, we think, that this is not the end of the fall in inflation, but that we'll get significant further declines as the year progresses. For a start, when we look at the energy price side, we not only have had the energy price guarantee, but a big decline in wholesale prices. And that should mean that come the autumn, we'll see yet another big step down in the energy price inflation. So that's good news. Food prices too, there are some hopeful signs, for instance, in terms of wholesale markets for wheat, etc., that there are big declines that could come at some point. How long it takes is hard to tell. We see an easing in supply chain disruptions, and that's having an impact on producer price inflation. So there are a number of factors here that should pull inflation considerably lower. But to target, unfortunately, that will take some time yet. So we won't quite get there in the very near term, not soon enough, unfortunately.
All right, Sandra, got to leave it there. Good to talk to you as ever this morning. Thank you.
Thanks.
Now to the world of podcasting then. Joining me here at the podcast show in North London is Ross Adams. He's Chief Executive of Stockholm-based Acast, one of the world's leading podcast hosting and monetization platforms. Founded in 2014, it collaborates with podcasters and content creators to develop exclusive shows or assist in the production process. It's also been a champion of the open podcast ecosystem ever since supporting making podcasts available on any listening platform. Ross, welcome to you.
Thank you.
I think you've just gone above 100,000 podcasts on your platform. What's driving growth right now?
I think podcasting is a burgeoning industry. I think it's just at an early start of the curve. Acast has delivered almost $250 million back to the creator industry. So we're seeing a lot more creators come into the space, which is why we've hit over 100,000 podcasts now.
What about the profitability of the business? Is all this activity driving profits growth as well as revenues?
I mean, we're a 9-year-old business. We've invested heavily in podcasting. And like I said, we're in that early curve. We're still a loss-making company, but there are many profitable podcasts out there, and we're helping drive a huge amount for the creator industry.
I mentioned the fact that you've been an advocate of the open ecosystem, if you like. For the uninitiated, why is that important?
So podcasting is a medium like no other. It distributes via something called RSS. So it's the hosting companies like us that host the file. When you push play on an Apple podcast or a Spotify, it fetches it from us, and then we send it across the open ecosystem. Now, there's certain players who want to govern and have podcasts just for their platform. For us, we believe that a listener should be able to listen to a podcast on any platform, and we distribute everywhere. So we believe in the open ecosystem.
So what are the threats to that?
So I think, these platforms that want to gatekeep content to one platform, podcasting is a 20-plus-year-old medium that has grown up in an open ecosystem, and it's different from other mediums. So it's not going to follow the same kind of rules as the likes of music has done. And, you've got millions of content creators that own their own IP, so it has to exist in an open ecosystem.
What about the role of advertising in all this? How important a revenue generator are they?
It's hugely. Podcasting is free. So you can access podcasts anywhere you'd like to for free. Now, the way that these podcasters make money and the way that we make money as a company is that we dynamically insert adverts and we associate brands with certain podcasts so they get the kind of influencer of the podcast to talk about an advert. So we split that revenue directly with the industry, and that's how the industry is held up today. There are subscriptions, and there's live, and there's merch, but the biggest part of the industry is the advertising sector.
And are advertisers as interested in podcasting as they were 12 months ago?
Definitely. I mean, you look at the show today, it's absolutely huge. And I think the industry is growing year after year. Even in a year where most mediums are down, podcasting is still up. Last year, roughly $2 billion was delivered in podcasting. So it's still in the early stages, but the money is shifting across from radio and digital media because they understand the environment that podcast is. It's a beautiful space.
And does the type of advertising differ dramatically from other forms of media?
Not really. I mean, the beauty is about podcasting, you've got everything from news to sports. So there's a whole variety of advertisers that come into the space. But it is still in that early innings. The kind of commercial industry is probably 9-10 years old. So podcasters, advertisers still yet to try podcasting. So it's still burgeoning, but, it's a $2 billion industry and it's definitely growing.
Where do you think the industry goes from here?
I mean, I think it's going to get even bigger and bigger. You know, we're seeing more and more creators creating content. We're seeing more and more listeners come into the space. I mean, you look at UK as an isolated market. 1 in 4 people listen to podcasts. Look at radio, 80 to 90% listen to kind of commercial radio. So it's got a long way to go to catch up with those mediums, which is why it's in the early innings. But it's definitely, once you discover podcasting, you jump right in. So,
do you worry that the sort of independent streak that ran through podcasting in its early days has been eroded? I mean, bit by bit, the tech giants have exerted more and more influence on this sector as the years have gone on, haven't they?
Yeah, they have done, but I think this is the beauty of podcasting. You know, millions of creators who own their own IP. It's not like the music industry where you sign 4 contracts and you've got 95% of the world's music on your platform. You know, for us, you've got to sign 5 million independent podcasts if you want them just to your platform. The beauty of RSS is you can take that RSS and you distribute it everywhere, and you can have access to the world's content instantly. So for us, I don't see that as a threat. I see that as actually helping accelerate the industry because they're bringing more spotlight to the industry.
All right, Ross, got to leave it there. Good to see you this morning. Best of luck for the rest of the event.
Thank you.
Some of today's other business news stories for you now. And the renewable energy generator SSE said today it's planning to invest up to £40 billion in low-carbon energy infrastructure during the next decade. The company, which is currently building the world's largest offshore wind farm at Dogger Bank in the North Sea, said it had a fully funded £18 billion 5-year investment plan to 2027, but was likely to end up investing more than that. The company's expecting to create more than 1,000 new green jobs every year during the period. Well, the news came as SSE reported pre-tax profits of £2.2 billion for the year to the end of March. That was up 89% on the same period a year earlier. The company invested a record £2.8 billion during the year. The shares are currently ahead by some 1.75%. Shares of Marks & Spencer have shot up by nearly 9% this morning after the retailer said it would be in a position to resume dividend payments this year. M&S, which has not paid a dividend since the 2019-20 financial year, reported a 7.8% decline in full-year pre-tax profits before one-off adjustments to £482 million. That was for the year to the 1st of April. It reflected higher costs and came despite a 9.9% rise in sales to just shy of £12 billion, but that was actually better than the market had been expecting. M&S food sales were ahead by 8.7%, while sales of clothing and home rose by 11.5%. Stuart Machin, the chief executive, said that M&S had outperformed the market in food, while in clothing and home, the stores giant was benefiting from a more confident approach to buying and a focus on the modern mainstream customer that was starting to drive better style perceptions. The owner of B&Q this morning blamed unusually wet weather in March for a drop in quarterly sales at the do-it-yourself chain. Kingfisher said that during the 3 months to the end of April, sales at B&Q had fallen by 1.5% to £980 million, with demand for items such as garden and outdoor products hit. But Thierry Garnier, the chief executive, said it was a good performance given the impact of weather on seasonal sales. Kingfisher, which is Europe's largest DIY retailer, said that overall sales in the period were ahead by 0.4%, with its Screwfix business trading well and seeing particularly strong demand from trade customers. The shares are currently off by 1.75%. And higher energy and chemicals prices and the cost of hiring more workers to tackle leakages has led to a drop in profits at Severn Trent. The supplier of water and sewage services to the Midlands and parts of Wales reported a pre-tax profit of £167.9 million for the year to the end of March. That was down nearly 39% on the same period 12 months earlier. Well, Liv Garfield, the chief executive, acknowledged that the industry had not moved quickly enough on sewage spills, but said the company was making good progress in dealing with the issue now. The shares are currently off by some 1.25%. Now, there's a podcast for just about everyone, whether you're into history, comedy, technology, business or politics. But so much choice creates challenges for consumers in selecting what to go for and for podcasters themselves in getting listeners to stick around and increase their engagement. The platform Podopolo, which carries hundreds of millions of episodes from more than 5 million podcasts, claims to be tackling that with the use of AI. It was founded by Melinda Whitstock, a former journalist with the BBC, The Times and our sister channel, CNBC. And she joins me now. Melinda, welcome to you.
Very nice to be here.
Now, this platform was built out of your experiences as a podcaster.
Yes, exactly. I've been a journalist for a very long time. I suppose I'm a recovering journalist, recovering TV anchor, but I'm also an entrepreneur. This is my 5th business at the intersection of media and technology, and I've always been intrigued by how to use things like AI to really improve the experience, not only for listeners and viewers of podcasts, but also for the podcasters themselves, 98% of whom struggle to make money from their podcasts.
Which is incredible. Before we talk about Podopolo, let's talk about your experiences as a podcaster, because I mean, you had a very, well, I mean, you still do it. Wings of Inspired Success, all about female entrepreneurs. What was the genesis for that?
Yes, you know, I wanted the podcast that I wish I had had as a female founder in technology. There are not many of us. It's very difficult for women to get venture capital. Only 2% of women founders get venture capital. And I decided I wanted to affirm and acclaim the journeys of female founders who've built 7, 8, and 9-figure businesses. And I worried to begin with, would there be enough that I would interview? It's 810 episodes in now, and I find it's a wonderful experience, not only to pass on the learnings, my own learnings, but also of all the guests. It's also created a lot of business for all those women that have been interviewed. So it feels good. It feels like a big give back.
But I mean, that is quite incredible. You've done 810 episodes. I mean, a lot of podcasts make it no further than a dozen.
That's true. And that's actually a big problem in the industry, because what happens is people launch a podcast because they have a mission, they have something, they have the transformation that they want to make in the world, or they launch a podcast to grow their business. For those, the vast majority with a mission, something that they want to say or do or educate or whatever, they're not marketers. They're not entrepreneurs, they're not business people, so they launch this podcast and they fade because they don't know how to be an SEO expert, they don't know how to do all the marketing, it leads to a lot of burnout, and they don't really necessarily understand what it takes to monetize the podcast. And that's a major reason for founding Podopolo as well, because can we make it easy for people to do that? And that's what our AI does.
So how do you utilize AI?
Yeah, a couple of ways. First, it powers a recommendation engine that offers very personalized recommendations to people based on their interests, their friend relationships, perhaps their location, their demographics. And this is very important because people struggle to find podcasts that are, interesting to them. So that makes it much easier for the listener and viewer to find content that's relevant to them, especially when the app has, it's actually 6 million podcasts now in audio and video and all languages and such, right? So it makes it easier for them to navigate and find what they're interested in. That same technology, though, acts like a matchmaker. It allows the podcasters to be put in front of the exact right audiences that are already interested in their shows, so they can be discovered by the right people. It helps them really grow and enhance their audience. Podopolo is also socially interactive, so there's a way for users to create clips of podcasts and easily share a 30-second bite with somebody else and spark a conversation about it, put learning into action. And the other way that the AI really makes a difference is deep audience insights. Most podcasters are lacking data about who their audience actually is, what they care about, so we're the only platform that provides a full, transparent kind of single source of truth, I guess, about their podcast.
What about the advertisers? Do you help them as well in terms of targeting people?
100%. So again, that same AI technology takes the guesswork out of advertising. Up until now, it's been like a numbers game, where a podcaster needs a really large audience because nobody knows who's listening. Not really. And the advertiser doesn't know, the podcaster doesn't know. So imagine for a moment that you actually do know, and say the podcast only has 1,000 listeners. They could be the exact right listeners for a particular advertiser. So we're able to matchmake there and deliver contextual advertising that the audience of a podcast would be interested in. So it's better for the listener, better for the podcaster, but for the advertiser, it's predictive. They get a much better return, and also the AI allows for brand safety because we know exactly what's going on in each episode because we're able to tag the content of each episode in real time.
Melinda, we've got to leave it there, I'm afraid. Great to see you this morning. Thanks very much for joining me. Well, last night's falls on Wall Street amid concerns over the US debt ceiling were followed by declines overnight for equities in the Asia-Pacific region. Most of the indices were in negative territory. As you can see there, all the main indices in the region were lower. Hong Kong and Shanghai each fell by at least 1.25%. Well, in Europe, stocks are also in negative territory right now. Talking points in continental Europe today, there aren't that many of them, to be honest. There you go, that's the indices, all of them down by 1% or more, actually. Embracer, which is a games developer in Sweden, the share's down some 37% in Stockholm right now. That is on news that a major strategic partnership it's been promising will not now be taking place. Well, here in London, the FTSE 100 is also in negative territory now, currently off by just over 1.5% in a broad-based sell-off led by the house builders. Taylor Wimpey and Persimmon are among the leading blue-chip fallers right now. Taylor Wimpey, as you can see there, off by some 5.25%. That's all on the back of the inflation numbers today. Markets starting to worry again about possible interest rate rises. So that is why the builders are down. There are only a couple of gainers to mention in the FTSE. I mentioned one of them earlier on, SSE, the energy generator, up nearly 1%. Well, at the bottom of the screen there, you can see Intertek. That's the quality testing and assurance group. The shares are up nearly 3% there right now on a trading update. Outside the FTSE 100, London Metric Property is down by some 6.3%. That is on the back of agreeing to buy a smaller rival for £198.6 million. M&S, one of the few rays of sunshine in the mid-cap index today. Look at that, the share's now some 13% higher on the session. On the foreign exchange markets, well, the big talking point today has actually been the New Zealand dollar, which fell back overnight after the country's central bank caught markets on the hop by suggesting it's done with raising interest rates for now. The pound is virtually unchanged, as you can see there, against both the dollar. It's about 0.1% lower right now against the euro. Single currency unchanged, meanwhile, more or less against the dollar. As for the oil price, well, that rallied overnight as comments from Saudi Arabia's energy minister were interpreted as pointing to further output cuts. A barrel of Brent crude will currently set you back $78.15 a barrel. That is up nearly 1.75% on the session. But joining me this morning is Rachel Winter. She's a partner at Killick & Co. Rachel, good to see you. We really got to start with Marks & Spencer, haven't we? I mean, shot the lights out.
Yeah, they have. So this is a company that's been struggling for a long time. The shares are down 60% over 5 years. It's really kind of lost its way on the fashion side. It's had all these
Rachel, can you hear me?
Yes, can you hear me in?
Oh, there we go. The perils of outside broadcasting. Sorry, Rachel, you were telling me all about Marks & Spencer.
I was, yes. So they've been really struggling for many years. The shares are down 60% over 5 years, and people have really been waiting for some sort of turnaround. And looking at the share price this morning, some investors clearly think that that turnaround is happening. I think what investors are most excited about is the dividend, which is being reinstated. The company suspended the dividend at the start of the pandemic. Investors were very disappointed because UK investors really love a dividend. And in the results this morning, the company announced it would be reinstating that dividend in November this year.
It's quite a busy day for company updates today, Rachel. Another highlight was SSE, one of the few gainers on the FTSE this morning.
Yeah, so I think a lot of people think SSE is an electricity supplier. It doesn't actually do that anymore. It's really changed its business around, and now it's really focused on generating renewable power. And it's actually in the process of building the world's biggest offshore wind farm. It's really benefited over the last year from higher power prices. But so for that reason, its profits were 89% higher. So really, really, really good results here. It has announced it will be raising its guidance for the next year. And because of its focus on renewable power, it does expect its profits from the renewable division to be up by 20% per year over the next 5 years. So I think this is really one of the most exciting companies in the FTSE 100 at the moment.
And Rachel, what did you make of Severn Trent? I mean, obviously this company's walking a bit of a tightrope because obviously they've got to generate a return for their shareholders, but the whole industry's in the spotlight right now over sewage spills, so they can't really be seen to be making too much money, if you like.
Exactly. So there's been a huge amount of negative press about the water industry recently for all these sewage spills. And it was interesting when I looked at their update this morning. Normally for any company update, you would start with the financials. But for Severn Trent this morning, the opening lines were all about the environmental credentials. So they really are focusing on this very heavily. The shares are down today, and actually I don't think that's because of their results. I think it's because of the UK's inflation reading this morning. So the inflation reading was higher than expected. That means interest rates are likely to go higher, and that will send bond prices down. A lot of people treat the shares of water companies as though they are bonds because they're seen as quite boring and they pay out regular coupons in the form of interest payments. And for that reason, they tend to trade like bonds. So when bond prices come down, we tend to see the shares of water companies coming down too. And that certainly has happened with Severn Trent and all of its competitors this morning.
And Rachel, a quick word on Kingfisher. Obviously, it was a very, very rainy March, but they still have some bits of the business that are doing extremely well, like Screwfix, for example.
Yes, it's been a difficult time, I think, for this company because they did so well in lockdown because people were going crazy for DIY and things have naturally slowed down a bit. The housing market has slowed down, which is bad news for them. But as you say, there certainly are some bright points. In particular, people are spending more on making their houses more sustainable. So there has been an increase in the sales of things like loft insulation. And also they are doing well online. So before the pandemic, about 7% of their sales took place online. And that's now up to about 17%. So there certainly are some bright points in this update today.
All right, Rachel, got to leave it there. Pity you weren't able to come and join me in North London here today. See you soon, I hope.
Yes, exactly. Well, have a good day.
Still to come here from the podcast show. Before we get on to that, bit of breaking news for you. I've just been told that Rishi Sunak, the Prime Minister, has written to Suella Braverman, the Home Secretary, to say that her conduct over the recent speeding fine that she incurred has not been a breach of the ministerial code. We will have more on that story throughout the morning here on Sky News as we get it. But still to come here from the podcast show, I'm going to be joined by a celebrity here. We're going to have a listening party with Tim Burgess from The Charlatans coming up next.
How are you feeling?
Strong.
One almighty crush.
It was like night fell.
Can you hear that, Mark?
The game is up. He's going to have to stand down.
Her Majesty Queen Elizabeth II has died.
Against the dollar, ever.
I am resigning.
Hopes of reaching Britain dashed, at least for today.
So we're coming straight to you. Welcome back. We're live from the podcast show here in North London. My next guest first achieved fame as the lead singer of The Charlatans, but over the last few years, he's gained many new fans as the host of Tim's Listening Party. During lockdown, Tim Burgess had the idea of gathering Twitter users to listen to albums together in real time. Since then, he and his followers have digested and discussed more than 1,000 albums. And the Listening Party is now in podcast form via Absolute Radio, with Tim continuing to share records alongside some some of his favourite artists. And I'm very pleased to say he joins me now. Tim, welcome to you.
Good to see you.
What made you hit on the idea in the first place?
Of the listening party on Twitter, well, I've been doing it for a little while with just the charlatans, but it occurred to me during lockdown that people were looking for things to do, and it seemed like a helpful thing to do to encourage other artists to get involved on my Twitter platform.
I mean, that was what really made it success. The fact that, I mean, I've listened to a few myself. You had Steve Hanley from The Fall on.
Oh, yeah.
And Peter Hook from Joy Division and New Order, of course. I mean, that's what really gives it some extra pizzazz, isn't it?
Well, Steve and Hooky are, heroes of mine. But we kind of spread it out to new artists and artists that, are heroes of other people. There's over 1,000 that we've done. We were doing at least 3 a day, and at the weekends, like 10 a day. So it was kind of quite chaotic, but fun.
So now it's turned into a radio show and a podcast, of course.
Yeah.
What was the impetus for that?
Well, lots of people would say to me that it should be a podcast, and I was like, great, let's just turn it into that then. And somebody offered me, my friend offered me a job being a radio presenter, broadcaster, which I'm still getting to grips with. It's not quite behind the scenes on Twitter, but I'm getting quite into it.
And did you need to sort of do a lot of the technological stuff yourself, the sort of nuts and bolts of podcasting, if you like?
Well, I have a lot of help.
But as it's become bigger, presumably it's quite difficult for you. Presumably you've got now people coming to you saying, can you feature our album? I mean, that's tricky.
Well, it's been like that. I mean, the first 3 weeks on Twitter during the lockdown, there were people that I knew or people that I could DM on Twitter. And then it became like just open to everybody. They would contact me, brand new albums, and people that I really wanted to meet and never thought I'd have the chance to. And with the radio show, so far we've had U2, Fall Out Boy, we've had the Bangles, Texas, and we've got Sparks coming up and Matt Johnson from The. So just really wonderful, engaging artists who want to talk about music, which is what the show's about.
How much of this, because you're still recording with the Charlatans, of course, we should I think you've got a new album coming out fairly soon, haven't you?
Well, we don't know about that. We're trying to find out what our sound is actually like in 2013, but I'm heading up to Manchester today to ask everybody else what they think.
But is this then a distraction from the job of making records?
Well, to me, I love music, so it's all part of the same thing, and it's... making a record is like investigating what you sound like or trying to work out how you connect with the other members of the band. And with the listening parties, it's just talking to musicians and getting the connection with other musicians. So it's a beautiful way of exploring music, really.
I mean, you're obviously passionate about what you do and passionate about music, obviously, but there is a commercial side to this now. Have you had to compromise artistically in any way at all?
I don't think so. I mean, not in any way. No, not really. I was trying to give you a very honest answer. But the thing about listening parties is that if everybody was my personal taste, then it wouldn't really go that far because mine's quite an eclectic taste. So you have to spread it out to everybody. So everybody's included. So if someone comes along that I might not know their music, then who am I to say whether it's good or not?
Yeah, no, I've got to ask you, Tim, you've been quite critical in the past about how much Spotify pay artists, and you made a comment particularly when Spotify's founder said he'd try and buy Arsenal Football Club. I mean, you're in bed with these people now.
You know what? I mean, it's kind of, again, with the listening party, people couldn't just play an album or a CD. You have to be able to stream a record. And I've complained about Spotify, and I probably still will. I think there has to be a fairer solution that all artists get a fairer share. And And it's important for new artists who are trying to break through to be able to get paid for what they do. You know.
Yeah. Amen to that. Tim, it's lovely to have you on the programme this morning.
My pleasure.
Thanks for joining.
Thanks for having me.
Good to see you. Just going to return now to the breaking news which I brought you before the break, which is that the Prime Minister, Rishi Sunak, has written to the Home Secretary, Suella Braverman, that is to make clear that following an investigation, he does not believe that Suella Braverman has broken the ministerial code. This, of course, relates to a speeding fine that she incurred last summer. Well, joining me now on set is our political correspondent, Sam Coates. Sam, what do you make of this?
So, significant breaking news, Ian. Rishi Sunak has decided to keep Home Secretary Suella Braverman in post. All the way back on Saturday night, the Sunday Times and the Mail on Sunday revealed that Suella Braverman had been having conversations with her officials about a speeding penalty. Now, it's never been quite clear what exactly she asked for. Did she ask perhaps for the points to be cancelled? Did she ask for her officials simply to investigate ways where she could go for a speed awareness course but not be seen by other participants, perhaps do it privately? Now, there is an allegation that the Labour Party made that this breached the ministerial code, and if you breach the ministerial code, then potentially you are out. Now, at the time, Rishi Sunak was at the G7 in Japan. He has returned to the UK, looked at the matter, looked at the emails underlying the matter, and this morning there's been an exchange of letters that makes clear that Rishi Sunak is keeping Suella Braverman in place. Let me just read you the critical bit of the letter. Rishi Sunak says, "I have consulted with my independent advisor." Now, that's Laurie Magnus, who he brought in to look at things like this. And he has advised that on this occasion, no further investigation is necessary, and I have accepted that advice on the basis of your letter and our discussion. My decision is that these matters do not amount to a breach of the ministerial code. So he, Rishi Sunak, is going to make the argument on the basis of the facts, not that we've got, but that he's got, that Suella Braverman should stay in place. It has to be said that had he taken the alternative course of action to force her to resign, there would have been a huge row, a row with the right of the party, a row at a point where it's the Home Secretary's brief on Thursday coming under scrutiny, with possibly 750,000 being the figure for the latest net migration. He's decided not to have that row, to keep her in place, but people will accuse, like Labour are, of Rishi Sunak being weak.
All right, Sam. Thanks for that. And Mr. Paula, I demoted you there, Deputy Political Editor. Sam, good to see you. Still to come here, live from the podcast show.
When we first started out, all we had was each other. And no songs, no Roxanne, no Message in a Bottle, no Every Breath You Take. He hadn't started writing them yet.
We're going to be continuing with the music theme with the hosts of the successful Rock on Tours podcast, Gary Kemp and Guy Pratt. Stay with us. Welcome back. We're continuing the musical theme now on Ian King Live here at the podcast show. Raconteurs is a podcast that aims to tell the real stories behind real music. It's presented by Spandau Ballet's Gary Kemp and the bassist Guy Pratt, who's worked with everyone from Pink Floyd to Madonna. Between them, they've managed to attract the likes of Mick Hucknall, Sheryl Crow and Marianne Faithfull to their podcast. And this week, they're going live for the first time with a punk special. Gary Kemp and Guy Pratt are with me now. Gentlemen, welcome to you both. Where did the idea for Raconteurs come from?
I suppose it came from, we played with Nick Mason from Pink Floyd in Sourceful of Secrets, and we were on tour about 4 years ago, and on the bus, all we spoke about.
Well, it came about because I actually brought a box set of old Grey Whistle Test DVDs. So we just sat on the bus watching these old performances, and you just chat and gossip. And of course, Nick always had great personal reminiscences about a lot of these artists.
Yeah, and you know, people just sort of said, well, you two really should get a podcast. Actually, it was Guy's idea. Yeah. And of course, we have a good phone book between us. You know.
You do. I mean, it's very, very relaxed. I mean, it just sounds like you're just chatting to old pals most of the time, which I guess is what you're doing.
That's kind of the idea. I mean, because we're not journalists, people will talk to us, and it's, you know, in a way, it's like blokes down the pub. I mean, it's very much, we are our audience. It's the same thing, you know. But what is amazing is that even people we know really, really well, we always find out stuff we didn't know, you know. Nick Mason told me something I've never known. I've known the guy for 40 years. We got
I think people in the business, you know, other musicians tend to open up a little bit more to us. I mean, we had Mick Fleetwood got extraordinarily emotional, didn't he, on the show?
Cried.
Because when he was talking about how he just had one dream to get Lindsay and everyone back on stage again. I think it's the vibe is that it's a sort of AAA pass with 3 musicians backstage having a chat, and that's how we keep it. It's never journalistic.
Yeah.
What about the reaction from the listeners? Who got the biggest reaction?
So I think it was Mick Fleetwood, wasn't it?
Mick Fleetwood got a very big reaction, yeah, and I think he's still been our most popular podcast. The 70s and the 80s are where our heartland really is, isn't it? I mean, and Noel, of course, Noel Gallagher, 90s. But, yeah, I think Noel always seems to attract people.
So who haven't you had on yet that you'd love to get on?
Well, so there's Peter, Paul and Pete. Peter Gabriel, Paul McCartney, Pete Townsend. And Rolling Stone would be lovely.
Yeah,
obviously.
I mean, all of which we know, but they're obviously the hardest people to convince that it's worth coming on the podcast. Yeah.
Do you get people coming to you now saying, please have me on?
Yeah, no, absolutely. I think, you know, PR companies have started to know about us. I mean, I think people are happy to come on because there isn't that sense of being interrogated that, you know, I think we all as musicians are used to feeling when we do other journalistic podcasts. And I think people just know that we have like-minded experiences to them.
That's actually, some of the nicest ones have been when someone's come on who clearly doesn't, we're part of a promo round, they don't know who we are, they don't really think what this is, and then you get sort of a few minutes in and they're going, oh, hang on, this is really nice, these guys are great.
I think what we like about it the most is that Guy and I are best friends, and we have good banter, and it's great to, once a week, just to sit down for an hour and have a moment with each other.
Yeah, it's great. I mean, do you think that podcasting represents a threat to live radio at all?
Yes.
Yeah.
No, I don't.
Well, I do.
I'm trying to say something newsworthy.
No, I mean, I probably would more listen to podcasts generally than I do live radio, even if it might be a podcast that was originally on live radio, which, you know, the BBC are doing. So. Yeah, of course it's a threat, absolutely.
Yeah. Now, you're taking the format live tomorrow. You're just up the road at the screen on the green with a punk special. Why have you gone for that particular theme?
It's an iconic thing. There are certain things that keep coming up in the podcast, no matter who to. All sorts of people have weird references to prog rock. And there's this legendary gig that happened at the screen on the green on August the 29th, 1976, which was where the Buzzcocks, the Clash, and the Sex Pistols played. One of us might have been there.
So it's been a source of ribbing and a bit of...
tomorrow night, my humiliation is complete.
Yes, it is. And we've had Glenn Matlock on before, but we're going to be just discussing that night, which is a real, as Guy says, seminal moment in rock music where, you know, it changed my life. But it was the beginning, really, the birth of that incredible movement.
So is this the precursor to doing more live events in future?
we'd love to. I mean,
Yeah. I mean, I think that's absolutely the way podcasts work now. You know, that you listen to your favourite podcast, but you would really dearly love to be in the audience. I mean, what's going to be interesting for us is to see what they look like, because, we don't kind of know what they look like yet.
Might be a nasty surprise for you. Yeah.
That's not a nice thing for the audience to hear. They're going to be thinking we are sitting up there wondering what we look like.
They are, yeah. So they better smarten up.
Right, before I let you go, your career, I think, began on the prices desk at the Financial Times.
My God, it did. You're right. How did you know that?
You could, because a mate of mine used to work with you at the FT.
I made a few screw-ups as well. I think I did more to damage capitalism than any copy of Socialist Worker.
You could have been a financial journalist. Where did it all go wrong?
Exactly.
Gary, Guy, great to see you both. Thank you.
Thank you very much.
Well, we're going to move away from podcasting for just a moment, because one of the sectors that's been most affected by the sharp rise in interest rates during the last 17 months is commercial property. There's growing evidence that higher interest rates have started to hit property values, as well as chipping away at the confidence of developers. Well, among the bigger players in London's West End is Great Portland Estates. It owns office and retail sites both there and in the City of London. Well, today it announced a pre-tax loss of £164 million for the year to the end of March. That compared with a profit of £166.7 million in the same period a year earlier, and reflected a decline in the value of its property portfolio. Well, joining me now is Toby Courtauld. He's Chief Executive of Great Portland Estates. Toby, good to see you this morning. I mean, everything that you've done is in common with all of the other big names recently. You've written down the value of your portfolio. I guess the point to stress is this is a non-cash write-down.
That's right. It's a valuation fall as a result of rising interest rates, as you've referenced, Ian, and it's not surprising, really, given what's been going on in financial markets over the last year or so. But I think actually it's less of a fall than many market commentators were expecting, largely because of where our assets are. So they're right in the middle of central London, predominantly West End, and because the demand from our customers has been very robust. And in fact, we've just announced a record quantity of leases for the year, something like £56 million worth, and they have been signed ahead of the estimates that the valuers told us we should be leasing them for. So, in fact, the valuation, whilst down, is less down than the market was expecting. And indeed, we beat our principal benchmark, being the MSCI index, by a full 5 percentage points. So not bad.
And very interestingly, Toby, I mean, you've actually had a record year for lettings in spite of this sort of markdown in asset values.
We have, and we've seen great demand from both large corporations and smaller companies as well. London, one of its great enduring strengths has been its magnetism for both big and small. We've brought Clifford Chance back from Canary Wharf to the core city. We're building their new HQ for them, and I think that's a really positive sign for the centre of town. And in our smaller spaces, our flex offer, which is a fully serviced offer, has seen some strong income growth and strong demand as well. And we fully expect that to continue. So some good numbers coming out there too.
Yeah, I mean, Clifford Chance moving back from the wharf to the city is quite a big thing. What about the supply and demand dynamics right now for office space in London?
So really interestingly, we've tracked for a long time the supply of new space. We think there is something like an 80% shortage of new space coming out of the ground over the next 4 years. And that's almost the highest we've ever seen it. And if you look specifically in the core of the West End, where the majority of our assets sit, we think the prime vacancy rate, so this is new, great quality spaces, is around 0.6%. So on average, people will talk about a vacancy rate that's much higher than that. And that doesn't really affect us so much because of where our assets sit. And at the prime level, 0.6% is a remarkably low number. So if you're looking for great quality space in central London, you are going to struggle to find it. And it is for that reason that we've been pre-leasing many of the buildings that we've been delivering as customers look out into the middle distance, find that there's very little space available, and have to forward buy it from developers like us, which is a reflection really of that shortage. And I don't see that easing up anytime soon. Planning is as hard as ever, and clearly with refinancing challenges having gone up, with interest rates having risen, a lot of companies are going to struggle to raise the capital needed to build and invest in new spaces. And clearly, with our gearing down at under 20%, we have the balance sheet to be able to invest in future development from here, which is very encouraging.
Yes, you've always run the business very conservatively. I mean, what you've just said, of course, Toby, has massive implications for rental growth over the next few years.
Yes, and we've this morning published our own prospective growth rates. We're forecasting prime office rents in our portfolio to grow over the next 12 months between 3 and 6%. That's an increase from our previous estimates. So some of that optimism around a supply shortage and the demand that we're seeing for our spaces right now is giving us the confidence to increase our expectations over the next 12 months.
Toby, we've just mentioned the fact that you've done a pre-letting deal with Clifford Chance. There's a lot of talk about AI right now and how it's going to disrupt various industries, the legal profession being one of them. Do you worry that AI is going to destroy jobs and that in turn hits rental demand in future?
I think it's going to be a more complex picture than perhaps that suggests. No question, some jobs will disappear into the ether, into AI, into all sorts of different arenas. That's always been the case. But at the same time, new technologies generate an enormous amount of new jobs. And one of London's great enduring strengths, frankly, for the last 1,000 years, has been its ability to reinvent itself and attract the brightest and the best from around the world to come and seek their fortunes and their livelihoods in this great city, investing and putting their own time and energy into new things. AI is clearly one of those. It comes with many health warnings, as we all understand. But I'm not worried that in cities that have a really important purpose, like London does, central London does, I'm not worried that AI disrupts to the extent that it removes the depths of its employment. Largely, I think because people like to be together. They like to come together, to think, to create, to have fun. And great cities like London provide that in spades, and I don't see that changing.
OK, Toby, we've got to leave it there. Busy day for your results day. We do appreciate you spending the time to chat to us. Thank you. Now, most people know Dolby, the audio technology company, for its surround sound in cinema and home entertainment systems. But it's also taken its technology into podcasting with Dolby Atmos, which it claims to go beyond, be it traditional surround sound systems, and create a more immersive effect for podcasters. Joining me now is Rob France. He's Head of Global Content Engineering at Dolby Laboratories. Rob, welcome to you. Put Dolby Atmos into the broader context for me, the wider Dolby Laboratories business.
Of course. Well, Dolby Atmos is one of our premium entertainment experiences. And for years now, it's been available in the cinemas, in home entertainment. As you say, there's a wide range of content already available in Dolby Atmos. But the way we work in all our technologies is really looking to bring together a few key partners to enable these technologies to be experienced in the home. And so we bring together content creators who are creating spectacular audio. And of course, for Dolby Atmos, that's about mixing in 3D and creating these great sounding movies and TV shows. We then to bring together the services, so the likes of a Netflix or a Sky TV, who deliver Dolby Atmos to consumers in the home. But sort of the core business for us is ultimately getting devices to integrate Dolby Atmos, and the major markets for us there are like the TVs, mobile phones, audio and smart speakers, and these types of categories. And so that's where our business is about this, but ultimately we're looking to bring each of these together in all of these content areas, and we have major partners across the board.
So it's a logical progression to go into podcasting. I mean, I'm struck by the fact that you're running special lessons for sound engineers and technicians on that. Is it quite a daunting technology for people to get their heads around?
So it's not a daunting technology to get around, but as with all things, it's like people like that opportunity to train and get out of their day job to actually spend the time to learn something new. And so we've long since run training for people mixing in Dolby Atmos, and before that in our previous technologies, because we think educating creators in how they can use the technology is the best way in getting those spectacular entertainment experiences. Because what we do see is that we can create these technologies that get content into the home, into cars, into mobiles, but actually it's working closely with the creative professionals where they really bring it to life and say, this is how my podcast should sound, this is how my music track should sound, and they're the ones who know it should sound. We can just help them in that process.
And you've partnered with the likes of Audible, who are now bringing it into their audio books. How do the revenues break down there? Do you get a revenue share, or is it a sort of flat fee they pay you?
Well, as I say, our business is really driven around consumer licensing. So if we look at how our business structures, I've talked about this like content, services, and devices, then device licensing is by far the biggest part of our business. And if we look at Dolby Atmos and Dolby Vision, which is our video technology, we group those together, and they've sort of grown 30% year on year. But ultimately, our revenue will come from licensing into cars, into smart speakers, and into mobiles. And we've seen huge growth in that area over the coming years.
Yeah, I was going to say, I mean, Dolby is an $8 billion company. I mean, podcast presumably is a fairly small part of the revenue mix.
Well, when we talk about content in Dolby, we want everybody to get the best possible experience and allow creators, whatever they create, to deliver those experiences. And so we see podcasts as a growing segment. Obviously, we don't have many podcasts in Dolby Atmos today. That's part of why we're at the show. We're here to give creators that experience of what a really good Dolby Atmos experience can be. And the other thing that I think's come together at this time is the devices that people listen to podcasts on are really becoming Dolby Atmos equipped. So we've had many mobiles for years. People listen to podcasts on mobiles, in the car, and on smart speakers. There's hundreds of millions of mobiles out there. Apple iPhones, Samsung Galaxy phones, all feature Dolby Atmos technology. But now we're seeing growth in smart speakers. Sonos Era 300 was launched recently. JBL announced a boombox that's going to feature Dolby Atmos. But more recently, we're seeing cars as well. So many Mercedes models, a few Volvos, and other things coming too.
Rob,
so it's just the right time to bring it together.
Good to see you. Got to leave it there. Thanks for joining me.
No, of course. Thank you.
That's it from me from the podcast show here in North London. Don't forget our podcast. You can catch that as well. Kimberly's up next with the build-up to PMQs. I'll see you tomorrow back in the studio. Cheerio.